Whether you're an employee, an employer, or a limited company director shareholder, it's likely that at some point you have heard about or been asked, when will I get my P60 this year? Don't forget, a P60 is required every tax year if you have taken a salary or provided a salary to your employees. At the end of each tax year, which spans from the 6th of April to the 5th of April, all UK employers need to perform a year-end payroll process, which involves submitting the final payroll figures to HMRC that cover the entire tax year. Each employer, including limited company business owners taking a salary, will inform HMRC the pay details of anyone they employed throughout the tax year. As part of this process, a summary is also generated to be distributed to all the current employees for their own records. This end of year payroll summary is called a P60. Apart from serving as evidence of earnings for employees and in some cases proof of previous employment, the Form P60 also has a number of practical uses. These include, but aren't limited to, loan applications, mortgage applications, applying for tax credits, proving income when renting a property, just to list a few. Any situation where a third party wants to confirm your income may result in the P60 form being used as evidence, so it's best to keep this very, very safe. Your employer can provide additional copies when needed, but it's best you keep a digital copy for your own records. Your P60 form contains your personal details that it relates to, such as your name, national insurance number, tax code, and works payroll number if you have one. As well as your personal details, your P60 will detail the following pay information: pay in the current employment plus any tax deducted, pay in the previous employment plus any tax deducted, national insurance deductions in this employment, details of any maternity or paternity or adoption pay, details of any student loan deductions. It is always a good idea for you to check your P60 to ensure all the details are correct. In particular, pay from previous employment, if any, has been added correctly, and also that the correct tax code has been used, as the incorrect tax code can result in an overpayment of tax. Although the P60 covers the tax year which ends on the 5th of April, you won't receive it until slightly after this date. If you are an employer or a limited company business owner paying themselves and other directors a salary, you are set a deadline of the 31st of May following the end of the tax year. P60 can be provided in paper form or digitally, although the latter is now becoming standard practice. If you're looking to send P60s digitally, be sure to use a secure platform, as the information it contains is very sensitive. In short, no, you will not. If you're working as a self-employed individual or in a partnership, you won't receive a P60 form. Instead, your income is reported via an annual self-assessment, which is also when the tax liability is calculated and later paid. In circumstances where you need to prove your income, such as for a mortgage application, you can generate what is known as a SA302 form or ask your accountant for this. The SA302 will summarize all the sources of income declared on your self-assessment tax return. If you are self-employed and your business has its own employees on PAYE payroll, then you will need to issue each employee with their own P60, but you will not receive one yourself. If you are an employer, you will only issue a P60 to your employees who remain in employment at the 5th of April in any tax year. If an employee leaves employment at any point before this date, then they are issued with a P45 form instead. The P45 contains similar information but demonstrates that the employment has now ended. If your employee then finds new employment, they will provide the P45 to their new employer, who will include the figures in any future payroll calculations and on the P60 should the employee still be there at the 5th of April. If you are employed by more than one company as at the 5th of April, then you should be provided with a P60 from each employment. In case you need to prove your income, you can use multiple P60s to demonstrate the different income streams. As a limited company director shareholder, your income is typically distributed as a mix of optimum PAYE salary and dividends for the purposes of tax efficiency. In this case, your limited company will still need to issue you, the director, or any employees that you have on PAYE with a P60 end of year tax summary for the part of income classified as salary. Any dividends that you receive from your company will not be detailed on the P60, but instead will be reported on your self-assessment tax return and will appear on what is known as your SA302, as we mentioned earlier.